TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow down 4, Nasdaq's off 20, S&P's a flat. Gold contract is trading down $2.50 at $1,085 an ounce. You have silver off 11 cents at $14.30. Platinum is down 12 at 900 even. You have copper off a penny at $2.21 a pound. Light sweet crude up 68 cents, $44.55 a barrel. Bonds, we have the 10-year flat, 126, 30-year down 5 ticks, 150, 130, and King Dollar's up 469 ticks, trading at 99.54. The euro is down 68 at 106, and the yen's trading 123.42. Now, you go over to the S&P. If we take a look at the S&P, what you're going to see out here is this. The SPY rolled over yesterday. We rolled over with volume expanding. So what you had inside the SPY is this. The SPY right now is trading at 208.11. As we rolled over yesterday, we did 131 million shares on the way down. What does that set up? That's going to set up a run to the lower part of this whole consolidation, which is pretty intense because we just went from a price point of 186 the 29th of September, got all the way up to 211.66, hit those highs up there, had lighter volume, rejected the highs, came off the highs with volume. What does that set up? That sets up a run to the lower end of the consolidation. Inside the Qs, they failed at their benchmark, that benchmark being 114.39. That was the high that was generated on the 20th of July. Bottom line, we get up to that high, we test it, we stay there 2 days. You come off that high yesterday, and we come off that high with 33 million shares. Same type of setup, meaning that you roll off the high, you roll off the high with expanded volume. What does that set up? That sets up lower price coming at you. Now, if we go over to the bond market, this is going to be pretty wild. So bonds, folks, came off those highs and came off those highs with velocity, with volume, with all of the above. Now, that being said, what you have out here is this. You know, we came off the 10-year came off 129.20. You're at 126.01. You did break the lowest swing point, and you broke it with volume. That being said, it looks like bonds right now are trying to build some cause to get back inside the range of 126.16. That's the 10-year. We take a look at the 30-year, and there's enough price damage in the bond market that it's going to take quite a few days of building cause to get inside that. Now, that being said, the 30-year is inside it. The 30-year, which leads the 10, is at 152. Anything inside 150, 125 is saying it's going to try to get up into higher price once again, which is no doubt that the ever-ready bond market is just absolutely amazing. Inside that NDX 100 out here, we have out here today is this, is that you get Apple getting hit. Someone's taking a bite out of Apple in a big way. Apple's down $3.50. Bottom line, what is that doing? That's putting heavy pressure inside the NDX 100, and you have volume coming back inside that structure. King Dollar, we go over to King Dollar. What we have with King Dollar is this. King Dollar is finishing up an ABC structure on the way up. That structure has a price projection of 1.00. We're at 99.53 right now. We'll see whether that's going to be an extension of an ABC structure on the way up, meaning is it more than a 1-to-1. Thus far, bottom line, it wants to get up into that level. And what we have had is that last Friday had big volume. Monday, lighter volume. Today, the volume's not bad, but I do expect we're going to see that 1-to-1 structure. This 10 a.m. update is brought to you every day by Everbank. For more information on the products they offer, you can give them a call at 855-750-4051, or you can visit everbank.com/TFNN. Have a great day. Have a safe day. Look forward to speaking right back here tomorrow morning, 10 o'clock.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new Market Safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.